Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. It's that time of the day to take a look at the dollar versus Swiss. I'm also going to take a quick gander at the euro versus Swiss, see what it's doing from a technical perspective. Today's day is October 22nd, 2024. Let's get started. Well, the good thing about the dollar versus Swiss, if you look at the 4-hour chart, is that the story sort of remains the same. On the downside, we did hold support against a 38.2% retracement yesterday. That came in at 0.86318. On the top side, we're still battling to try and get above the high price that we saw from last week's trading at 0.86684. So with the price currently trading at 0.8652, we're in between the support down here, the resistance up here, and the market is sort of going up and down, up and down, up and down. So there's not a lot to report off that until the time comes when the price does break above either the high and heads toward the 100-day moving average. That level comes in at 0.86985, or we break below 38.2% retracement and start to probe down toward this swing area, and maybe even down toward the rising 100 bar moving average on the 4-hour chart. We will see. But what we do know is that the levels are in play. We have the support, we have the resistance, and we'll see which way it breaks from here. Now, taking a look at the euro versus Swiss franc. Again, we'll look at the 4-hour chart. In trading yesterday, or in the comments yesterday, I spoke to the idea that the high prices right through here in the early Asian session on Monday found resistance sellers. Admittedly, last week the price did move above those those moving averages here, 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 and even here. And each of the time the market moved up above them, you could see that it sort of failed to the downside, failed to the downside, failed to the downside. So holding against that level and moving lower was a significant change in the trend. We did break below this trend line. We did come down to test the 61.8% retracement, but we did bounce back above those levels. Those were the targets on the downside to get to and through to increase the bearish bias. Last week we held support against the 61.8% retracement. And as you can see in the current bar, the price has broken below the trend line once again. And we also have made a little bit of a headway in breaking below the 61.8% retracement. So sellers are trying to take more control. What I would do is, if you're looking for lower levels, to use this level as a resistance level, as a risk defining level. As long as the price can remain below that level, the bias remains to the downside, and we'll see if we can break below the 61.8% retracement and start to make more headway to the downside in this currency pair, maybe down toward this low price that we saw a few weeks ago. And if we break below that level, down toward the low price that we saw at the beginning of September. So that's my technical look at the euro versus Swiss and the dollar versus Swiss. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.